Now, the CEO of the Nigeria Mortgage Refinance Company projects that the firm will refinance close to 400,000 mortgages in the next 5 years. Appointed in December last year. In fact, he tells me that he started actually the last week of November. Professor Charles Inyangete is the CEO, and he's in the studio with us today to share his thoughts. I've also invited my colleague Wolefa Murewa to become part of the conversation as we try comprehensively to understand how to make sure that Nigerians are provided with the housing. Professor, thank you for your time.
Thank you.
I think it's important to put at the outset that actually this company that we're talking about is going to be 2 years in June in terms of its creation.
Yes.
Created June 2013, formally launched by President Goodluck Jonathan in January 2014. Yes. But operationally, you only got your license in February. So
to
now,
be exact, February 18th, 2015
goodness
is when
me.
we got a CBN license.
That changes my question a little bit because I wanted to ask you how far has been progress. But since we are now here and you got your license in February 2015, I think it's pertinent to ask how far you are from beginning the important work that you have been given.
Right. The key work we have to do is to bring liquidity to the market. And that's what primarily NMRC is set up to do. And in doing so, help extend the tenor of mortgages in the economy.
Yes.
And help bring affordability to housing in the economy. That is key to what we have to do going forward.
Yeah.
In doing that, we have had to look at the market from where it is. And we started by looking at what we call the legacy loans. And that's existing mortgages in the economy, because our role is to refinance. And we had to look at that and to bring them to conformity with what we now call our uniform underwriting standards.
Right.
We have done that, and that drives our first process of a mortgage refinance. We are close to concluding that process. We have filed for SEC approvals. We'll be listing our first bonds during this month of May.
Absolutely. So the work is about to begin.
The work, and the first tranche of bond issue will be 10 billion naira.
All right, it's already sounding exciting that you're getting to the market.
Yeah,
but in terms of the groundwork that has had to be done to bring you to this stage, you mentioned about how the importance of reorganizing the mortgages so that they're acceptable to you. To what extent would you say that the current laws in Nigeria really make things difficult in terms of really expanding the mortgage sector? Because many people talk about things like the Land Use Act being a challenge, transfer of title may be an issue if you have foreclosure to deal with. So have we dealt with these issues at this stage?
We recognize all of those, and I'll take them in turn.
Yes.
Starting with the issues of title and land use and foreclosure. We started by really setting the ground for that to be not the key issue, but to be part of the facilitation of mortgages by creating a model mortgage and foreclosure law. We have at least 21 states have signed up for that, and will be the draft of that mortgage model mortgage foreclosure law is in place.
So what's the implication of this law?
The implication of that is it streamlines the whole process of mortgage registration and titling. Right. So you would have a concurrent process for the land title and the mortgage registration working hand in hand. And we believe that is what is required to allow confidence for investors in terms of knowing that the foreclosure laws are there and the process is understood and clear, and confidence for those who really investing in mortgages, the lenders, to be satisfied that they can indeed have a good chance of foreclosure in the event of default. So those are the basis for going forward.
Yeah.
We've done that. In order to also ensure that the market operates on a level playing field, we've had to bring in underwriting standards. Before that, it was almost a free-for-all. You walk into one institution, you do not quite understand the basis on which you evaluate it. So from origination right through to closing and beyond, the underwriting standard sets out the pace and levels the playing field.
Yeah. So we started by talking about one of the more complicated issues in that whole process, but one of your mandates as well, and I'm looking at it, there are two things here. One is to ensure that banks have access to increased access to liquidity, and also to provide longer term funds for the mortgage market. Have you started on that?
Yes,
on
that's
that
exactly our role in raising the bond.
Yes.
We're bridging the gap by taking mortgage market to the capital market. So we're linking mortgages to the capital market.
Right.
Our bond issue would allow us to raise funds in the capital market with the government guarantee, which allows us to come in at a cheaper rate than would otherwise.
What is cheaper rate? Because I think for many people, they want to understand
that is
what difference it's going to make.
That is a big question. Yeah. If you think that the government of Nigeria is borrowing a double digit, it means initially cheaper rate means about the rate that the government of Nigeria is borrowing.
So it'll be close to the sovereign rate.
Close to the sovereign rate because we have a sovereign guarantee.
Right.
That would be cheaper than any other corporate would be able to borrow in the market. So that already gives us that advantage. We would only charge a small margin as we pass on the funds for the refinancing activity onto the mortgage banks.
Okay. Actually, definitely, that's a very exciting first start because when you look at the rates in the market now, people are creating mortgages at rates well over 20%.
Yes,
right.
So bringing it down to closer to 13, 14%, I guess many people will get excited. But in terms of meeting some of these targets, because he mentioned earlier 400,000 units, 400,000 mortgages rather. That sounds like a tall order, given the fact that we only have about 20,000 mortgages in the market today.
Yeah.
Well, we're not going to just focus on the refinancing activity. We know that the construction side of the business has to be taken care of in order to actually roll out the housing stock. If I can illustrate, when the 10,000 mortgage program was initiated last year, the response was overwhelming, 66,000 plus.
The market is waiting
response.
for you.
The market is there. You know, what is lacking is partly the housing stock.
Right.
That would drive the affordability. The right housing stock is and that requires bringing in developers as part of the process and making development more affordable. That aspect has not been adequately addressed as we speak. And so there's now more and more focus on generating new housing stock.
Is that your responsibility, though?
It is not so much our responsibility, but if we are to drive this market, we need to be able to
facilitate its growth.
We want to facilitate and influence the growth of the housing sector so that housing can actually come into the market. Of those 66,000 that I referred to earlier on from that program, not that many are able to find the appropriate housing that they're looking for at the affordable prices. So there's still that disconnect. You know, we need to generate the housing, and we need to also supply the funding for the primary mortgages to be issued.
Right.
And in terms of your role in facilitating this, is it more of just advocacy, or how exactly do you get involved in getting the developers to bring the housing stock?
It will initially be advocacy. As we speak, we, NMRC, organize a public awareness and capacity building workshop. Today is the third and final day of that workshop here in Lagos. We're meeting industry players as well as key stakeholders in the mortgage sector and really explaining to them
What does that translate to in terms of the turn of bond for the person who's coming in and wants a mortgage from the bank that you will have access to the money that you're raising?
We're now changing what was hitherto, on average, let's say 5 years, at best maybe 10 years, to a 20-year mortgage, yes.
So
we can...
So that would be the new norm for mortgages.
The new norm would be 20 years, providing you're the right age group that can still be in employment.
What are you saying? You're going to discriminate against me?
if you're the older, yeah.
I think you allude to an interesting point. What's going to be the size of the typical mortgages under this program?
Yeah. We've capped ours at 50 million. We would not be giving mortgages above, we would not be refinancing mortgages in excess of 50 million. So we're not, contrary to some opinion, we're not looking at funding big, expensive houses. We're looking
the guys
at
who can already afford it anyway.
Exactly. We're really looking at the first-time buyer and looking at houses. Perhaps typically, we think the typical house prices are those in the regions of the 15, maybe 20, 25 million, which are the practical end for first-time buyers.
Professor, I know you have a background in developing as well. And so your thoughts about how all of this catalyzes the housing sector and the opportunity for investments, given the fact that the NMRC is about to take off. You've set out your targets, 400,000 mortgages.
In 5 years.
In 5 years, true. It's good. It's important to add that point, yes. But then, clearly, that is an exciting opportunity for a developer in this market.
Absolutely. We want developers to be organized. In some other countries, including on this continent, we have a better organized development group. We know there is an organized group in Nigeria. We want them to work better. We want them to develop in organized manner, not haphazard development. We want them to develop to acceptable quality. Part of the problem is that the development come in at poor quality and very high prices, and so the market doesn't take up some of that. But we also want there to be a proper linkage between the developers and the financiers, so that that disconnect, that gap is plugged. And so we expect that whether the commercial banks, whether the mortgage banks would be involved actively in supporting development.
Do you think there's a case? Do you think there's a case for a special bank to support developers? Do you think? Because many developers will tell you there's a challenge with funding. That's one of the bigger challenges, but of course there are others. But your thoughts about that?
It doesn't necessarily have to be a special bank. You know, banks can have
the existing banks.
The existing banks can have development as one of their focal points, and can create units within them to drive.
One of the reasons I mentioned that is because many developers, when you interact with them, they suggest that the banks don't understand their business enough. They're not giving the flexibility.
But maybe again, that's part of the education that we're talking about.
But that is also part of what we. That's also part of what we as NMRC have to do.
In terms of the
when we stand ready to refinance the bank's portfolio, the bank knows it has comfort that the mortgages is creating out of a developer's project. Let's say they're working with a developer, will eventually be refinanced, and so they know that their money is not going to be tied. And the developers also have some assurance that there will be off-takers through the banks that support them. So when we have the full chain in place, it enhances an easier process, and it makes for a more efficient, more effective housing market.
Absolutely. We're talking about Nigeria's housing market, and we're discussing that with Professor Charles Inyangete, CEO of the Nigeria Mortgage Refinance Company. Welcome back. You're watching Beyond Markets, and today we are discussing Nigeria's housing market, and we are doing so with Professor Charles Inyangete, CEO of the Nigeria Mortgage Refinance Company. He's joined us here in studio, and I've got with me here Wale Famrewa to try and pick some of these issues and trying to find ways in which we can finally lay to rest this ghost that continues to plague Nigeria's market. Professor, you said at the beginning of the show that 21 states have so far joined. I know that there are 36 Nigerian states plus the federal capital.
Yes.
Who is missing, and do you have a program to bring them in?
We have a program to bring in every state that is missing. I think that's the better way to put it.
The diplomatic answer.
we do have that. And for the states that are joined, we actually now going on a rollout with, as I said earlier on, with our draft model mortgage and foreclosure law for them to pass through their states.
So let's understand what this foreclosure law implies.
That's the key part of the whole thing.
So what this means is that if somebody defaults, the process is much quicker.
It sets out a very clear process for foreclosure, and it eliminates the mandatory requirement for there to be a judicial process.
Right.
So now you sign up to an arbitration process. And that arbitration.
Wouldn't the easier route be to simply create a law that takes over, that outlines that foreclosure law so that it applies across the whole country rather than allowing the states to have some kind of say in the process?
Well, when you begin to do things from a national perspective, then you have to deal with the federal and the national approach to it. Land matters at the end of the day, they're state issues, and they're under the purview of the governors of the respective states.
I guess I'm describing an ideal scenario.
So we thought it's easier to have states sign on and get to understand it. And when all the 36 states plus the FCT have signed on, then it would become automatically a national issue.
I imagine
that makes for a quicker, easier process than taking
I'll probably definitely agree with the professor there, because to change some of these things, you actually need constitutional reform.
Exactly.
So it's probably easier to just tackle it on the state level, where the state laws can be fit.
Absolutely. So you're just going to make it so good, everybody will want to join.
Absolutely.
Right. But if we can move on,
and from the 21 states that have signed on, that's the indication.
Yeah.
Okay. If we can move on to how this catalyzes the capital market itself, what are your broad expectations? Because right now, especially in the fixed income market, it's really dominated by federal government bonds. Your bond will be guaranteed by the government, but
indeed,
what do you imagine, especially with what we've seen in other parts of the world, the US, etc.? What could this mean for liquidity of fixed income instruments and diversity of fixed income instruments?
The signals are already very good. We are being approached in writing by very large international institutions who want to buy into our bond even before we've issued them.
Wow.
So the signals out there is very, very powerful. I'm talking about 500 billion euro institutions wanting to buy the bonds before they're issued. So that augurs well for the market. We're also going to be listing our bond on the FMDQ. So that would also help the growth of the fixed income market. If I can make a comparison, our equivalent institution in Malaysia, Chagamas, is the second largest issuer of bonds in the market.
Wow. So potentially we're talking big here in terms of the size of the book that you could create.
Our program over what we call the sunset period, which is a 7-year window, is actually in the region of 440 billion is what we're looking at. And it's very significant. If we can look in terms of what this market potential is, if we were to take Botswana as an example, Botswana has 2% GDP as its mortgage, residential mortgage sector. If we hit that sort of level in Nigeria, we'll be talking 1.2 trillion naira. That is very significant.
So let's not talk the percentage now.
It's still relatively small, given the size of the economy.
It's very, very small.
But let's talk a bit about the new government coming in and the attention that they can and need to bring to the housing sector. Earlier I was speaking to the CEO of a developer in Nigeria who says directly and indirectly he employs over 10,000 people. Now, if this government wants to create jobs, I get the sense that housing is something they need to look at.
Housing absolutely provides one of the great opportunities for diversifying this economy. The kind of numbers that I've just indicated, if we were to bring housing and real estate and mortgage to a significant proportion of the GDP, we're talking a very, very large. It's a huge employer. It's a huge sustainable employer, not just a sustainable employer. It's really a key catalyst for economic growth as well as diversification. But what greater need than housing that people aspire for?
And job creation as well. I got some interesting stats actually from your website. 5.2 direct jobs for every new home. 5.2 direct jobs for every new home, right? Yes. And 2.48, let's call it 2.5 or 2.5 indirect jobs in related housing expenditure. When you extrapolate,
when you go to a large construction site and just see the activity there and see the number of people that are required on a long, because sustainable employment, the large site might last 2, 3, 4 years, and by that time another one, and it may not be the same people, but that's the kind of impact that housing and real estate development brings to an economy.
And for me, is it going to cost the government a lot? Because with what's happening
what will
with
it
NMRC,
cost the government?
The NMRC,
we are not waiting for the government to invest.
Simply just guarantees.
That's exactly what we're saying.
Yeah, we're not asking for the government to invest in us. We're thankful that the government sponsored the creation of the NMRC. What we require and what we've secured is a government guarantee. And we then go to the market to raise money for the refinancing of mortgages. There are so many such opportunities, even right down to the development end of it, that can be pursued as part of the government policy.
Sounds very exciting. I'm really looking forward to it.
Absolutely. Okay, before you go, we need to talk a little bit about bringing the banks into this whole thing, because we spoke earlier about the fact that you spoke about the fact that developers do talk about the need for funding as a key requirement. What role do the banks, the existing banks, play in trying to get this market going?
Okay, let me distinguish them. There's a mortgage banks whose role are primarily providing the initial mortgages, creating the initial mortgages. And there's also the commercial banks who also do have mortgage desks or even mortgage
on their own,
subsidiaries on their own.
Their own resources.
So you'll be engaging both?
Yes, we're engaging both. We currently have 20 institutions, 4 of which are commercial banks and the other 16 primary mortgage banks, who are part of what we prefer to describe as the NMRC market. Because our role now, and our essence, the essence of our role is to create a mortgage market. And that's really what we're doing.
Right.
So the way we're engaging the banks is via our underwriting standards. Every bank and every, whether mortgage bank or commercial bank that wants to be part of it, signs up to our underwriting standards. We've had a MBAN, with the Mortgage Bankers Association, be part of it, the CBN, and all the key stakeholders were part of the process of developing that underwriting standards. So that is in place. We also have a uniformity in terms of standardization of the loan documentation. So going forward, the only difference would be your logo from the next person's. We have a level playing field, we have a uniform standards by which the evaluations are done, and so we're engaging the banks, we're making them understand, and more, they are actually our shareholders.
What's been their reaction to your coming to them and laying out these plans?
Well, we've had a very positive response. We have more banks wanting to be part of it.
Any concerns raised?
Oh, there always will be concerns raised.
Because I would imagine
everyone expects us to hit the magic single digit. But we cannot do it out of thin air. The economy doesn't yet support single digit unless if you were had to have subsidized.
This is the mortgage rate.
Mortgage rate.
Yes, that's what I was going to come to in terms of those margins. How are you going to make sure that the banks don't profit here? And sorry, I'm going on to the banks.
No,
here
we actually, every bank that signs up would also sign up to a master service and purchase agreement, which is part of what drives the refinancing transaction.
It
governs that, and we set a limit on what you can on-lend. So you're not going to be able to profit here. And it would serve no purpose in doing so, because you're in competition in a non-level playing field, in a uniform, based on a uniform underwriting standards. So it would pay for everyone to compete and offer the best to the Nigerian who's looking to buy a house.
If we can come back to the conversation around what the government can do to really catalyze the housing sector. Earlier you talked about setting standards for the banks in terms of how the loans are organized, and we talked about what the government can do without spending money. And I do get the sense that that's really that's one area that the government can do more, setting the standards for development and for how the development industry organizes itself.
Creating the enabling environment and in terms of its policy and not having retrogressive policies, that is part of really going forward what would best serve Nigeria and best serve the mortgage and the housing sector generally.
Absolutely. I think we all certainly know what will best serve Nigeria is to reduce the 17 million housing